Get off the sidelines and take control of your financial future at www.tackletrading.com. Get in the game.
Matt Justice here for Tackle Trading to bring you the Monday market recap video. A lot to go over in the market today. Market rebounded very, very solidly right off its 200-day moving average, as you can see right here. But it wasn't so much that it was on the 200-day moving average, which has proven to be a support level many times in the past. If you looked as it kind of got into that range over here, tested the range over here in July, and it also tested just about a week and a half ago, tested it once again right here. So it certainly had a technical bounce today with the market up about 1.23%. Let's go ahead and look at the volume here. Volume down a little bit on the S&P 500 today with about 1.19 million contracts traded on the S&P 500 mini. If you look at the spiders here, you're going to see something of very, very similar. Obviously, you can't see the kiss off the 200-day moving average because of the gap early on in the morning. However, even at that, look at the volume here. Very, very low volume with 76 million transactions today on the S&P 500. To give you a little bit of a, an understanding of kind of how little that is, just last Thursday and Friday, we traded at 118 million shares traded on those 2 down days. I'm still looking at significant downside pressure despite the positive news that the spiders had today. And really what kind of drove the positive market day was Richard Fischer, the Dallas Fed president, vice chair of the Central Bank of the United States, came out today and it amazingly stated that he doesn't think the Fed should raise interest rates until it gets back into the 2% inflationary mark, which is amazing to me because we have not been at the 2% inflation mark. The reported number since about 2012, and Richard Fischer has been a hawk in the past in many capacities. However, he sounded like a very big dove today, and as you can see, the market just responded to that. Well, if we're not going to raise interest rates in September, let's go back into buy mode. But again, the volume just was not there, did not support kind of the move. So I don't think this is any game changer today. Low volume on a market that went up 1.25%. Nothing to get too excited about. However, you did see many of the stocks out there in the marketplace really respond really well. And I'm looking at the energy sector here specifically. Crude oil, for example, had a fairly decent day today, up 2%, kind of in that, taking off the sell-off that we've seen over the last month or so. But it's coming right back down into these major support levels right here. So I'm seeing that maybe perhaps is a little bit of a support bounce to a certain extent. I'm not reading too much into that either. However, a couple basic material energy stocks out there. One, Tesoro here, just with an absolute amazing move in the market today, breaking out of resistance. Tesoro's been on many of our watch lists for a while now, and a nice little retracement, kind of breaking back out, moving back to the top side, and very, very good moving on Tesoro with the breakout. I expect that to continue. Another one here, Valero, VLO. VLO had a really similar breakout condition that we've seen here. Higher high, higher low coming back into the breakout. Good volume on the breakout, finishing at the very top of its range. Both Tesoro and Valero both up 5% or more on the day with volume behind it. So I'm looking at a couple of those. I'm saying, this is a really good day for a couple energy companies, for the market as well. But I'm not buying it for crude specifically. Certainly there's some companies that will be impacted like that, like Valero or Tesoro, and I like those plays out there quite a bit. But if you're looking at, say, the dollar index here, dollar index kind of faded today. Nothing too dramatic, down about less than 0.5%. However, that dollar coming down had a lot to do with crude oil going up, had a lot to do with gold finding a little bit of an upward movement in price, finding a little bit of a low base, starting to retrace back up as gold. It would not surprise me in any capacity to see gold get back up into this 1230, 1240 range, 1220 range. On silver itself, silver got back up above 15 with a good move towards the top side. However, I don't know, you do have some overhead resistance here at 15, 20, 30, also at right here into this range at about the 16 level as well. I still think naked puts on silver and specifically natural gas, and natural gas here, we're looking at UNG, the ETF, just straight on neutral. So natural gas really didn't get beat up the way silver or gold or oil did over the last month. Really like naked puts on natural gas, really like naked puts on silver right now. Don't know if I would touch gold. I do not want to read too much into the dollar sell-off over the last 4 days. I do not think it's that big of a deal. You are trending a little bit neutral now in the dollar, and I'll have the Forex report coming out here in just a little bit. But coming back to the S&P 500 very quickly, in the S&P 500, you had Richard Fischer, report or come out and say that, he doesn't foresee the Fed raising rates till it gets back to the 2% reported inflation. Well, Richard Fischer, I would love if you could answer one question. How about we go back to accounting for other things like food and gas and energy and everything else that we're all paying out there, because when you constantly manipulate how we report economic reports, when you're saying get back to where it was in 2012, I don't even know what that means any longer. Well, Lockhart, another Fed official, came out later on the day and said he still expects a September hike, and it leads to the frustration that many in Wall Street, many retail traders, hedge funds, professionals out there, what we have with the Fed, you have this constant, just one person saying one thing, the other person saying a completely different thing. Nobody knows exactly what they're going to do. It looks like they are going to raise rates in September, but now what's Richard Fischer doing? Coming out here and saying, well, we're not going to do it until 2% inflation. That's not going to be in September. That's not going to be in December. That's not going to be in October. That's not going to be anytime this year. That's probably not going to be anytime next year either, based on how they report the inflationary numbers. So it's really frustrating from a trading investing perspective when we don't know what the Fed is going to do, and the Fed just plays these parlor tricks constantly with the emotions of the financial markets, and I just do not believe that they're doing it without a plan. And if their plan is to keep the market guessing, the market's going to pay them a price at one point in the future, and that is very, very frustrating. And it's almost like the Fed has not seen what happens when you see these massive manipulations, not only in the stock market, but the commodities market, the currency market. And when they actually come out, the bubbles have to burst. And the Fed's just delaying it and delaying it and delaying it. And that's just not right in a free market system. And so I would love it if the Fed actually got a game plan instead of just, hey, let's confuse everybody. That doesn't seem like a good game plan. Outside of the Fed really driving the market today, you had some other news in the market with Berkshire Hathaway, with Warren Buffett, with his largest merger and acquisition ever with Precision Cast Parts, coming out here for $37 total billion. And as you can see, ladies and gentlemen, this is absolutely astonishing. Just recently, at about 500,000 shares were being traded daily on average in this company, and look at the spike in volume today, up around 16.5 million shares. Everybody buying PCP, Precision Cast Parts, and furthering Berkshire's emerging giant in the industrial sector. However, I want to look at just kind of here on a 30-minute chart, and as you can see, all of this was announced overnight. Gaps up all the way to 250.44, literally flat lines around 230. Really interesting to see the merger and acquisition still continue right around $2.7 trillion in mergers and acquisitions worldwide, which would be a record number, and we still have quite a bit of market action for the rest of the year. Another thing that I want to see here is quite astonishing, happened over the last couple of days, is this company called AQXP. And if you look at this company, just over the last couple of days, this Canadian pharmaceutical company basically has soared from Oh, look at that. Look at the low price coming in just a couple days ago on Thursday of last week, right around $2 a share, right around $2 a share. And then here last Friday started emerging all the way up to about $10 a share. And then it came out just over the weekend that they had some drug that basically, I think it was a bladder pain drug referred to as AQX-1125. It posted positive mid-stage trial results for bladder pain during drug references. And as you can see, it just literally $10 all the way up to $55.75, and then just gets blasted back down because people are obviously going to lock in profit on something like that move, and closes down around $18. If you look at the daily price movement, honestly speaking, over the last 2 days, outside of about a year and a half ago when all those penny medical marijuana companies exploded in price action on penny stocks. Outside of that, I really haven't seen something like this, where you have this massive spike in volume coming right back down. Nothing I would touch, not in any capacity would I touch it. I just find it really, really curious on a day like today. But look out for caution. I do expect volatility this week in the market. We do have quite a week planned out there in the market. Not so much on the actual earnings reports, but if you look at some of the economic data out there in the week just here for the United States, I'll go through all of them with the Forex report later on tonight. But unit labor costs coming in tomorrow, retail sales on Thursday, the PPI report on Friday, and the consumer sentiment report on Friday as well. So look at economically this week. I'm also really kind of focused on a technical driven market this week. I think it's still in play to have a neutral bias in the portfolio, just given the fact that I don't see anything that happened today that's going to expand and break out of this price action we're seeing in the market. If you're looking at some of the strength out there, the Qs really responded well. I like the Qs right here. It's at a resistance level, it's at an old resistance, new support level, responded well with over 1% today. IWM is still a laggard in the market though, testing that 200-day moving average right there, got down underneath it just a little bit, kind of very similar price action that we got last week. I like a short on IWM if we're looking at on the downside. I like a long on the Qs if we're looking on the upside. This is Matt Justice for Tackle Trading. Hope you enjoyed the market recap video for the day of Monday, August 10th, 2015. Check us out over there at tackletrading.com.
Get off the sidelines and take control of your financial future at www.tackletrading.com. Get in the game.